Welcome to today's morning report chart analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday the 24th of April. You've got a fairly mixed outlook in terms of equity markets today, but the dollar continues to strengthen. This relative outperformance that we have seen on the US data versus certainly the Eurozone data continues to be laid bare. You had the data on new home sales yesterday, which was strong in the US, and you compare that with what we saw this morning. Again, another disappointment in the Eurozone data, where the German IFO business climate number came in below expectations. The new current conditions also missed estimates as well, and it just continues to sort of show how the Eurozone data is just fairly disappointing, and that is again sort of coming through in the euro dollar price as well, falling back again today. 112, not a million miles off 112, big figure. I'll talk about the technical implications of that in a little bit in my later videos, but also what we can see is just this general sense of dollar strength through these major pairs. You can see here the Australian dollar is the big underperformer on the day. We had Australian inflation numbers, quarterly inflation numbers, missed estimates to the downside, so subsequently that puts pressure on the RBA to potentially sort of move towards a more easier monetary stance, and that has hit the Aussie dollar this morning. And just broadly across markets as well, we saw the equities in the States, the S&P 500 2933, that is the highest close since we saw the close in September of 2931, and that is again an all-time closing high, and is a really strong move, and we can see that US markets continue to make strong moves to the upside. Little bit back on the futures today, about 0.1% lower, and that is sort of played into this consolidation really on European markets today. But generally speaking, equities remain very strong in the States, as earnings season remains fairly a positive one at the moment. So in terms of data points today, as I said, we've had the German IFO numbers out this morning. That was again key for the Eurozone. We've just had out the UK public sector borrowing numbers, and they've come in slightly positively actually, which should help to stabilise sterling to an extent. So that's a positive number there. But also we're looking out for the Bank of Canada this afternoon. Bank of Canada rate decision at 3 o'clock. Expected to see no change, but it'll be interesting to see how the Bank of Canada sets its stall out, considering obviously the less hawkish position the Fed had last time out, and also the issues with issues with growth, which seems to be stalling a little bit in Canada. Also, we've got the crude stocks. EIA crude inventories at 3:30, expected to be a crude inventory build of 1.3 million barrels now. So that takes me to my chart of the day, which is silver. Now, we've seen gold breaking down below the key support band 1276 to 1280. Saw yesterday, after a week and a half of holding up above 1490, silver broke down, and look at the implications of 1490, a long-term pivot. Again, a long-term pivot line is 1490. Breaking back below that is a key level breakdown, certainly given the support that had been built over the last month or so. But look at this downtrend, consistent run of lower highs, consistent run of lower highs on the RSI, consistent falling away on the MACD lines. So it all suggests rallies are seen as a chance to sell. That downtrend comes in at 1504 today. The market rallying a shade this morning. 1490 is now a basis of overhead supply, basis of resistance. So you've got a nice area to sell silver into strength, because it certainly looks as though the market is building for a retreat back towards initial support 1446. That was sort of a mid-December low. But realistically, support back towards 14 figure to 1385 could easily be seen. So if this corrective move really does accelerate, so certainly rallies are being seen as a chance to sell on silver. You've got the negative configuration across the RSI throughout the last month. Look at that, 60 time and time again, 60 limiting the upside on the RSI and the hourly. So this little rebound looks like it's going to be coming into resistance around that 1490 area, and it's likely to be seen as a chance to sell. So I wish you good luck in your trading today, and I will speak to you later.